morning. My name is Hombu. First, I would like to start off by thanking you all for taking the time of your busy schedules to attend today's earnings briefing. To all of you gathered here, stockholders, institutional investors, analysts, financial institutions, stakeholders, I would like to thank you for your continued support and loyalty. To those of you seated in the back who might have some difficulty seeing the screen, I would kindly ask you to follow along by referring to the printed materials we handed out at the entrance. Without further ado, I would like to dive right into the highlights for the third quarter of the fiscal year 2018. Market conditions remained depressed for the sectors of investment business and general entertainment business. Nevertheless, and despite a generally adverse business climate, we were able to close the quarter in the black in terms of operating profits on a consolidated basis for the third quarter, on account of our financial business both in the domestic and overseas markets. Please turn to the next page. In this slide, we compare and contrast relevant earnings metrics on a YOY basis. In a nutshell, J-Trust registered an increase in revenue while at the same time posting a decrease in profits. I would now like to go over each item individually, starting with the metric for consolidated operating income, which grew from 63.7 billion yen during the third quarter of the fiscal year 2017 to 66.8 billion yen during the third quarter of the current fiscal year. The three categories that comprise our financial business, domestic, South Korea, and Southeast Asia in particular, saw increased profitability to the tune of 16%. Please turn to page 8. The slide on page 8 further breaks down our results as it pertains to the operating income statistic. On a consolidated basis, we saw a contraction of 5 billion yen. The financial arm of J-Trust, which represents our core business, showed a very strong performance, generating 7.5 billion yen in operating income during the third quarter. This represents an increase of 5 billion yen from 2.5 billion yen during the third quarter of last year. In stark contrast to this, J-Trust investment arm finished the third quarter in the red with 2.7 billion yen in losses. The sector contracted by 10.4 billion yen from a 7.7 billion yen profit during the third quarter of the financial year 2017. Regarding the other items on the list, these are corporate expenses which have remained stable YOY. The following slide details the operations of our financial business. The Southeast Asian sector really shone through during the third quarter, as we were able to turn a 3.4 billion yen loss into a profit of 1.1 billion yen. I would now like to refer you to slide 10. As you can see from the figures on the slide, we saw a contraction in terms of profitability for the investment arm of J-Trust. More specifically, we went from 7.7 billion yen in profits last year to a 2.7 billion yen loss during the third quarter of financial year 2018. It really comes down to a matter of perspective, but if one subtracts these losses derived from our investment business, the cumulative profit at the end of the third quarter was actually 5.3 billion yen. This translates into an improvement of 5 billion yen from a cumulative loss of 100 million yen during the third quarter of last year. Please turn to page 12. The current slide provides a visual representation of the company's profits over the past few quarters. Please note that the data here excludes valuation considerations and presents an accurate measure of the company's true ability and earnings potential. We were thus able to post 14.8 billion yen in profits, up 95% from 7.6 billion yen from the same period last year. I would now like to discuss J-Trust results up to the third quarter of fiscal year 2018, as well as the company's plans and forecasts through the fourth quarter and beyond. We have amended our forecast for the fiscal year 2018 and are currently aiming to secure 2.4 billion yen in operating profits from 77.5% billion yen in operating income. We had to revise down our forecast for the fiscal year 2018, but this doesn't take into account 11 billion yen in operating income derived from the sale of Adors Inc. stock by one of J-Trust's subsidiaries, a company by the name of Keyholder Inc. The aforementioned 11 billion, as well as 1 billion yen in operating profits, fall within the accounting category of income from discontinued operations and must therefore be reported separately in the income statement. So when you take this fact into account, J-Trust actually grew during the period in question. I would now like to refer your attention to the slide on page 15. In this section, we provide our revised targets for each business segment individually. As you can see from the data, we expect to be able to close the fiscal year 2018 in the black and deliver 2.4 billion yen in operating profit. I would now like to refer your attention to the next slide. This shows the differences between the third and fourth quarters of operating profits. We have identified two main reasons for this shortfall. The highlights are as follows. First, regarding the Southeast Asia division of the financial arm of J-Trust, we expect to incur losses derived from a downward adjustment to J-Trust Investment Indonesia's book valuation. As such, we forecast a 100 million yen loss over a 3-month period for the Southeast Asian division of our company's financial business. Second, the sale by Keyholder Inc. of stock in Adors Inc. falls in the accounting category of income of discontinued operations and thus had to be excluded from this quarter's income statement. I would now like to go over income and profit metrics for each market segment individually. First, the results for the domestic financial business are as follows. Operating income metrics remain stable and unchanged YOY at 7 billion yen for the third quarter. In terms of operating profit, and if you exclude gains realized on the non-recurring sale of fixed assets last year, profit metrics remain stable YOY. Now, I would like to dive a little bit deeper into the data. Our loan balance continues to grow at a steady pace. Conditions have similarly been favorable to our apartment loans balance portfolio. Thanks to the very strict screening of housing manufacturers, as well as our company policy to deal exclusively in real estate conveniently located near the transportation infrastructure of Japan's 4 biggest cities of Tokyo, Nagoya, Osaka, and Fukuoka, we have managed to retain occupancy rates in excess of 98%, while at the same time maintaining an unblemished record of 0 borrower defaults. I would now like to refer your attention to page 24. This section deals with our receivable collection business. As you can see from the chart, we continue to expand our portfolio during the third quarter to the tune of an annualized increase of 18.7 billion yen. I should point out, though, that in addition to the 766.4 billion yen showed on the screen, there are also another 130 billion yen worth written off claims receivable in Nihon Hoshou's inherited from Takefuji. I'm sure many of you who have followed our company over the years are familiar with this information, but when I announced it here, the amount was 100 billion. In other words, over the past year, we sorted out the receivables, and it is an increase of 30 billion yen in claim receivables. Similarly, the IRI for our servicer business stood at a very respectable 40%. We thus intend to leverage our internal rate of return and our expansive receivables portfolio to continue to deliver consistent profits in the domestic market. In terms of profit target metrics, we continue moving in the right direction. In concrete terms, we stood at 74% and 79% completion for the metrics of operating income and profit, respectively. Next, I would like to detail the operations of our financial business in South Korea. This category grew at an annualized rate of 28% and 58% for the metrics of operating income and operating profit, respectively. I would now like to delve a little deeper into the individual components that make up our South Korean division. This current slide details the evolution of our consumer loan balance for our various banks and capital firms, as well as delinquency rate statistics for these loans. We continued to increase our loan portfolio during the third quarter, even amidst expanding regulatory oversight. Delinquency rates, too, have fallen below 5%. Please turn to the next page. Due to increased regulatory oversight, we are in the process of shifting our loan portfolio away from retail customers to focus mainly on institutional clients. This has led to a slight decrease in the average lending interest rate. However, we were able to make up for this due to an overall increase in net interest income. In terms of profit target metrics, we continue moving in the right direction. In concrete terms, we stood at 75% and 86% completion for the metrics of operating income and profit, respectively. Finally, as it pertains to the company's financial business in Southeast Asia, the operating income metric grew to the tune of 100 million yen YOY. For the metric of operating profits, we managed to turn around a loss of 3.4 billion yen last year into a profit of 1.1 billion. This translates into an improvement of 4.5 billion yen. It should be noted the figures quoted in this slide for J-Trust Bank, which we acquired 3 years ago, were compiled in according to the IFRS accounting standard, in which we began registering a surplus record. However, if you apply the local Indonesian accounting standard, you'll find we've actually been profitable for the last year. Please turn to the next page. This slide deals with J-Trust Bank's loan balance, as well as the ratio of non-performing loans to the total loan balance. I would like to refer your attention to the portion of loans colored dark blue in the vertical bar graph, which were screened and accumulated since our operation and currently represent 49% of total loans. As a result of this, the total percentage of non-performing loans, shown by the orange line on the graph, dropped all the way down to 2.93% during the third quarter. Even in the case of these non-performing loans, we were able to recoup 70% of the amount owned through the liquidation of fixed assets used as collateral, so we can continue to operate with a very low credit cost of just 1%. Next, I would like to discuss the metrics of net interest income, the bank's quick assets ratio, as well as the cost of funding. I would like to refer your attention to the line graph in dark blue. This portion of the graph represents low-interest savings account, which currently stand at 13.19%. As a result of this, we were able to lower our funding costs to an average of 6.78%. Starting the summer of 2017, we decided to implement major changes to the institution's core banking system with the intent of creating efficiencies allowing us to lower our funding costs. This transaction took a little longer than expected, eventually reaching the implementation phase last month. Moving forward, we intend to continue with our efforts to bring down costs to 6.02% by the end of the current fiscal year. Looking at each corporate structure individually, in the servicer business, J-Trust Investment Indonesia posted 300 million yen in operating losses. This loss was, however, absorbed by J-Trust Bank, allowing the entire segment to close the quarter in the black. Finally, on the issue of profit target metrics, we're currently at 78% and 110% completion for the metrics of operating income and operating profit, respectively. Looking ahead into the fourth quarter, we expect a contraction to the tune of 100 million yen due to a downward adjustment in the book valuation of J-Trust Investment Indonesia. Regarding the company's non-financial business, as I mentioned at the beginning of this presentation, one of our subsidiaries, Keyholder Inc., will be selling their stake of Adors Inc. stock. This decision was made in the context of an ongoing effort by the J-Trust Group to direct and more efficiently distribute common resources among its component companies. Last but not least, I would like to present an analysis of our investment business at J-Trust. Cumulative operating losses stood at 2.7 billion yen during the third quarter. As you're aware, profitability has been negatively affected by losses derived from the derivative component of GL convertible debentures. We have made a monetary claim on these bonds, so no losses on derivative component will occur in the future. Please turn to the next page. In this slide, we provide an analysis of the impact of the aforementioned losses derived from our involvement with GLPCL. We initially acquired a position in GLPCL convertible debentures with a face value of $180 million, around 20 billion yen. We canceled the convertible debentures and reclassified the receivables to monetary claim, through which we booked 5.4 billion yen in income and restored the value of our position to 20 billion yen. Out of the 20 billion yen, we have 1.7 billion yen in allowances for bad debts. Similarly, and since the price of GLPCL stock closed the year at 6.8 Thai baht, we declared a loss of 4.7 billion yen during the third quarter. Finally, on the issue of profit target metrics, we're currently at 86% and 108% completion for the metrics of operating income and operating profit, respectively. Please note these figures are based on our revised projections for the fiscal year 2018. As we've outlined in the slide on page 16, we expect a slight decline in operating profits for the fourth quarter. It should be noted that this contraction has clear reason, however, on our financial businesses which continue to operate as usual. This concludes my presentation. I would now like to give the floor to Representative Director Chiba, who will use this opportunity to explain the company's current and future growth structure. Thank you for listening. My name is Representative Director Chiba. 3 or 4 years ago, we started a journey across the desert known as Southeast Asia. We were still in the process of traversing its immensity when we ran into a vicious sandstorm last year. We are currently traveling through that unforgiving sandstorm on our way to an oasis with enough water to quench our thirst. Next year, we would like to go past that oasis and find ourselves in firmer ground. We want to walk not on sand dunes, but instead take firm and confident strides on a well-paved road leading to a brighter future. The first step towards giving shape to the vision I just outlined, I feel the first step is to acknowledge our shortcomings and take this opportunity to offer a profuse apology to the stockholders and shareholders gathered here today. For our revised earnings outlook, as well as for J-Trust's lackluster performance on the Tokyo Stock Exchange as of late. The journey we embarked 3 years ago was never going to be an easy one. As we continue our incursion into uncharted territory no other man has ever braved before, I too am driven to express my heartfelt appreciation for all those involved with the J-Trust Group in the world. There are good and bad times that we need to work as a cohesive team, and thus far I have seen nothing but selfless dedication to this common project. This kind of dedication and camaraderie gives me strength to move forward one step at a time towards a better future for J-Trust. Up until last year, and to continue the desert metaphor, it was as though we were stuck in a massive sandstorm, unable to either move or get out. Now, and while the skies have yet to clear completely, we are back on our feet, making slow but steady progress against the storm's unforgiving gales. The fact that we're now back on our feet is undoubtedly thanks to the performance of our core business of finance for the domestic, South Korean, and Southeast Asian markets. The 3 segments combined were able to deliver 7.5 billion yen in profits during the third quarter. Our finance business grew at an annualized rate of 5 billion yen. Assuming an equal rate of growth, we'll be looking at 12.5 billion yen in operating profits for the third quarter of the fiscal year 2019. In addition to this, the fiscal year 2018 was the year to dream big. We set ourselves 3 rather ambitious goals for this year. For the first one, we were successful in making the transition to the IFRS accounting reporting standard during the first quarter. Another target we set ourselves to accomplish during the fiscal year 2018 was that of delivering 10 billion yen in operating profits by the end of the year. However, in light of the recent earnings revision, this path has, for all intents and purposes, been blocked to us. Finally, and regarding our third goal of ascending to the first section of the Tokyo Stock Exchange, this milestone too is taking a little longer than we expected. We have a vicious sandstorm to contend with at the moment, but it's not like we have given up on our wish to be listed on the most prestigious section of the Tokyo Stock Exchange. As such, we shall continue to persevere and continue striving towards this goal. Furthermore, and in relation to our dealings with group lease and in line with the strategy we outlined previously, and we disclosed the current situation yesterday, we intend to use the legal processing experience and know-how we acquired through the past both Lopro Limited and Takefuji Limited and make use of the full extent of the law to deliver as much value as physically possible to our stakeholders. I'll be keeping you updated as the situation evolves. With that as a way of introduction, I would now like to go over J-Trust's current and future plans for further growth and expansion. First, as it pertains to the domestic financial business, we've entered a phase characterized by a combination of both stability and growth. It was through the continued support of banks in Japan that we were and still are able to grow our guarantee business. Thank you for your loyalty. Also, our collection/servicer business continues to generate a steady and stable cash flow. It is truly a wonderful business model. I would now like to delve a bit deeper into each segment individually, starting with domestic business. Please turn to the next page. As you can see from the data, operating profit margins for Nihon Hosho stood at 56.7%. This is a very impressive number, especially when you consider the fact that it's 11 times the national average of 5%. We provided data from two other domestic credit guarantee companies. Let's call them E and Z. The operating profit margin for E stood at over 43%, whereas Z boasts what are probably the highest margins in the industry at a stunning 72%. So as you can see, while Nihon Hosho probably doesn't necessarily get a spot in the top 10 for the most profitable credit guarantee company in the country, it is definitely a high-tier operation. Let us now analyze each company's respective share price. E is currently trading at a PBR of 5.7, with Z at a slightly lower 3.7. J-Trust Group, with Nihon Hosho included, on the other hand, is currently trading at around half the book value. When seen from this perspective, Nihon Hosho is like a veritable diamond in the rough. Moving forward, we'll continue to try and shine a light in what is an undervalued enterprise. In fact, I believe the issue at play here is the so-called conglomerate discount. The fact that we tend to want to plant our flags in regions where others shy away from leads to a classic example of the so-called conglomerate discount. But again, our domestic business is the shining diamond of the group. I would now like to outline our plans for Nihon Hosho, as well as for our domestic financial business as a whole. Our first initiative will materialize in the form of a partnership with Shikoku Bank to offer a new financing scheme utilizing overseas real estate as collateral for loans to invest in overseas properties. It will most likely be the first of its kind in Japan, and I'm pleased to announce market response has been very positive thus far. In fact, we received close to 40 applications over a 10-day period. We shall be allowing real estate from Hawaii to be used in these deals, but we're in the process of expanding our reach to areas such as Texas and Las Vegas as well. If you know anyone that fits the customer profile for this type of product, please make sure to mention Nihon Hosho. I would now like to go over our business operations in South Korea. I've been in charge of the South Korean business and have been personally living in the country since 2012, and I can attest the regulatory climate in South Korea is definitely moving towards and not away from more regulation. Let's say we're predicting profits of 1 billion, 1.5 billion yen, and a new piece of legislation comes out. This could completely ruin our plans as has happened in the past 4 years. As you saw from the data before, our operations in South Korea continue to grow at a healthy pace, but we must always bear in mind the possibility of government intervention. 2007, for example, saw a non-binding provision by the South Korean government dictating loans originating from financial institutions whose primary purpose is accepting savings deposits should not exceed 105% of the previous year's retail loan balance. Again, this is merely a very aggressive government prescription, but it has succeeded in restricting our company's organic growth, as it puts a brake on J-Trust's strategy for loan asset growth. That was for 2017. The year before that, in 2016, the South Korean government introduced a rate cap of 27.9% for loans. In addition to this cap, the South Korean government has also come up with a provision forcing lending institutions to multiply allowances for doubtful debts by a factor of 1.5% for loans bearing an annualized interest rate of 20% or more. Talk is cheap, but I don't think they understand the true reach of their decision. Before our incursion into the South Korean market, we used to operate as a non-banking entity, and let me tell you, the fractional reserve requirements between these two types of institutions can differ 2- or 3-fold. Going by this, and if we were operating by the same requirements as a non-banking institution, we would have easily finished the last 3 accounting periods in the black. There are different approaches to this issue, but I believe the idea is to stress test the system in order to make it more resilient to external shocks and threats and protect bank deposits. 2018 saw the worldwide introduction of the IFRS 9 standard, and with it, stricter regulations regarding allowances for bad debts. Our response to this will be to naturally increase our margin requirements to be in compliance with this new standard and give us a buffer in case stricter regulations come out. Finally, and still on the topic of South Korea, I would like to go over the country's new personal bankruptcy process. So, in the old system and within the context of a loan to a retail customer who underwent the process of voluntary bankruptcy, the institution who underwrote the loan would have the option of being paid over a period of 5 years. Under the new system, however, this period has been shortened to 3 years. Under normal circumstances, would take a 30% haircut on the loan, after which would receive the remaining 70% over a 5-year period. Under this new provision, however, the South Korean government forces us to take a 60% cut, with the remaining to be paid over a 3-year period. As you can imagine, the implications for the industry as a whole are dire. On top of that, the South Korean government has lowered the cap to 24% on February the 8th. Again, this is something we anticipated happening. Moving forward, we expect the legislative framework to closely change to closely match levels seen in Japan. You can find a detailed listing of our portfolio for our South Korean financial business. When push comes to shove and more of these regulations come into effect, I intend to draw upon my own experiences back home when the same thing happened in Japan. So, take 2 non-banking institutions in Japan, say A and P, both of which survived and continue to thrive to this day. How did these companies manage to survive the market downdraft caused by the new regulatory framework? Simply put, the moment interest rates for consumer loans went down, they started offering and marketing low interest rate products, catering to an excellent clientele, and build a loyal customer base. This is the key to long-term survival in this market, building a loyal and diversified customer base. So, for example, starting 2016, we have decided to diversify our target customer base in preparation for when the interest rate cap drops below the 20% mark. I feel we can leverage our operational know-how in the Japanese market and put it to good use in South Korea. In addition to all this, we must also contend with the issue of reserve requirements. This too is a replay of what happened in Japan 15 years ago. This actually gives us an advantage in this industry in the sense that it allows us to make full use of our experience to predict and maneuver around new changes to the regulatory regime. This in turn translates into higher profit margins for our company. I've just mentioned the tough regulatory climate in South Korea. I've been living in South Korea for the past 5 years, so I know how business is conducted in Japan and how it's conducted in other countries. This has given me the opportunity to appreciate the good aspects Japanese culture has to offer. As far as South Korea is concerned, one thing I think they have going for them is their expertise in the field of IT. It wouldn't be an exaggeration to say they're number 1 in the entire world when it comes to information technology. If not number 1, they're close. Japan has a pretty good telecommunications infrastructure, but it's no match for South Korea's. Living here, I can say through first-hand experience that while Japan is definitely on the cutting edge in terms of legal and regulatory matters, South Korea is definitely 10 to 15 years ahead of us when it comes to the actual implementation of IT technologies. In Korea, bank transfers operate around the clock, 7 days a week, 365 days a year. Not just that, they've also perfectly integrated the banking infrastructure so that you can pay with a credit card and have the details of your purchase delivered to your cell phone via SMS in a matter of seconds. They've also almost entirely done away with paper contracts. You can do everything on your phone through the use of specialized apps. It truly is an amazing country. Unfortunately, and the same goes for Japan as well, it is also one of the most tightly regulated markets in the world. We have access to this wonderful technology and we're actively trying to implement technological solutions to enhance the customer experience. So for example, we started deploying an AI-based chatbot at one of our savings banks, allowing for around-the-clock customer service. In Japan, we have Line, but in South Korea, they have an app called Kakao Talk. We've integrated our chatbot service with this app to better service our customers' needs and answer any questions they might have about everyday banking operations. Then there's the Fintech angle. We have developed our own app, for which we have the patent, by the way, to allow prospective customers to open an account without having to go to a physical branch location. You can open an account, apply for a loan, and receive money all on your phone. This process streamlines the KYC process because South Korean citizens already have their private information stored on their smartphones. We obviously don't have this kind of system in Japan yet, but this is already possible in South Korea in 2018. I would now like to refer your attention to the next slide. It details our latest initiative to create a virtual branch on Facebook and other popular SNS services as part of an effort to attract new customers. Termed JT Pay, this app contains a component called JT Money. I guess you could think of it as our own version of Alipay, the payment processing framework used by the Chinese company Alibaba. JT Money includes a plethora of useful features, allowing users to check their balances online, make and receive payments, send and receive invoices, among other things. We intend to make this app available to our customers starting in June. Through this initiative, we hope to combine IT and Fintech and reach a wider market share. Moving forward, we'd like to take a proactive approach to establishing partnership with other fintech ventures and open new platforms of this kind. But getting back to JT Pay, it won't merely be a copy of Alipay, as we intend to add new and exclusive features to make our product unique. But even if it were a mere copy, we'd be facing limitations and regulatory hurdles when trying to implement this technology in Japan and South Korea. Take Indonesia, for example, where you can send and receive funds through your cell phone even if you don't have a bank account. All you need is a cell phone number. So in a hypothetical scenario, I could easily send 500 yen to your number without your having to open a bank account. You receive an SMS message on your device, open the QR code provided, and use it to withdraw the funds at your local bank or ATM. This would prove problematic in legislation such as Japan or South Korea, both of which have strict AML laws requiring money to be wired and deposited to and from a fully KYC-compliant bank account. Different legislations have different laws, but we're hoping to use our platform to find a way to facilitate this process and to leverage this technology in places like Southeast Asia, where regulations are not as strict as Japan and South Korea. It is amidst this backdrop of regulatory oversight that we intend to continue growing our business in South Korea, while at the same time using the best aspects of both Japanese and South Korean culture and technology to expand our operations into the Southeast Asian market. Like I've stated throughout this presentation, we're seeing a lot of new regulations spring up in South Korea. This might be true as far as loans are concerned, but we sense amazing opportunities in the servicer business. In fact, after these new regulations were announced and went into effect, we started seeing great interest from clients who want to sell us accounts receivables. Needless to say, we examine each of these offers very carefully and are very discriminating when purchasing these types of products. But I think this is a very clear indication we'll continue to see increased demand in the servicer business over the coming months and years. Starting the end of last year, one can say we're witnessing a shift from the rapid expansion of our banking and servicer operations to a phase characterized by stable, gradual growth. As we continue to integrate IT, IoT, and Fintech into our products, we intend to merge more and more of our existing bank branches and capture more of these efficiencies. We've been doing this over the past 2 or 3 years, during which we have merged 12 bank locations, greatly reducing costs and increasing efficiency. More than anything, the fact remains that not many of the major players want to try their hand in South Korea. Aside from us, as a finance industry, we have ORIX and SBI, which means that for as long as others don't make the incursion into this market, we'll continue to have the ability to steadily grow our market share. I would now like to discuss a couple of new developments on the Indonesian front. We finally finished the structural transition to our new core banking system. I think the transition went very smoothly, for which I would like to take this opportunity to express my gratitude to the programming staff that made it possible. This brand new core system allows us to carry out reporting and payment tasks in real time with great efficiency. This gain in efficiency in turn translates into lower costs and, more importantly, increased customer satisfaction. Thanks to the new system, our customers no longer need to be physically present at a J-Trust Bank Indonesia branch to perform everyday banking operations. Moving forward, we intend to add new programs and features to this platform, allowing us to better service our customers and tap into a burgeoning market of 270 million people. The same holds true for Fintech. Starting in January of this year, we started a new lending program in partnership with a peer-to-peer lending business in Indonesia and are currently in the process of partnering up with a cloud accounting software firm to create a platform allowing us to evaluate loan applications from small and mid-sized companies. Last year, J-Trust Bank reported significant losses in Indonesia, but we're confident that moving forward, J-Trust Bank will become one of our main drivers for growth. In fact, we turned a profit in our Indonesia operations for the second quarter in a row last year. It took us 2.5 years to turn a profit in our South Korean business initially, so I'm very pleased with the results. I'm proud of our team led by Ando and composed of Asano, Oikawa, Miwa, Takayama, Kusubae, Ikeda, who have been running our operations in Indonesia. I would like to use this opportunity to congratulate you on a job well done. I have high hopes for this team, and I hope they'll do an equally stupendous job in driving a second phase for growth in Indonesia. And now I would like to announce one of our crowning achievements during the third quarter, namely our partnership with Shikoku Bank. We at J-Trust Bank have started an initiative to support and share our knowledge with Japanese companies wanting to make inroads into the Indonesian market. I think these types of initiatives are also incredibly beneficial for Japan as well, but we're also seeing interest from big-name financial institutions from South Korea hoping to generate and leverage synergies with J-Trust Bank. Finally, I would like to give you an overview of our servicer business, in particular our operations at JTII in Indonesia. We moved all non-performing loans from JT Bank to this entity, and we've also acquired 4 important contracts, 3 of which we were able to collect on fully by the end of last year. We expect to obtain a 99% collection rate overall. Compared to Japan and South Korea, legal proceedings in Indonesia are incredibly difficult and morose. However, this also works to our advantage because it almost gives us a monopoly of the island, since there's only 1 or 2 other companies engaging in this type of business aside from us. Moving forward, we intend to build on our experience and start acquiring non-performing loans from regional banks in Indonesia. Part of our Indonesian team I mentioned before, 2 of them spent over a year and learned alongside me in South Korea and achieved an IRR of 40% at Partner Servicer in Japan and over 51% at TA Assets in South Korea. They will now attempt to replicate this feat in the Indonesian market. I believe the key to succeeding in Indonesia is to target retail customers instead of big financial institutions. It's hard to collect on these small lot receivables, but the returns are often 2.5 times the book value of the receivables that are less than 1 million yen. We have experience achieving results of 144% on amounts up to 40 million yen, so we have confidence we'll be able to replicate these results moving forward. I'll be personally taking part in our efforts in Indonesia and attempt to strengthen our base of operations there by leveraging what I term J-Trust technology. This includes IT, Fintech, as well as an ability to adapt to the needs and sensibilities of each culture while allowing us to leverage our know-how in the servicer business. Moving forward, we intend to further expand our retail finance operations to other countries in Southeast Asia. We'll surely continue to face many sandstorms and obstacles, but it is in trying times like these when we manage to stay together and work as a cohesive team that I am proud to be a part of the J-Trust family. I am also immensely grateful to the stakeholders who have stuck by our company. What each of us can do as an individual is limited, but I would like to use this forum to pledge my commitment to sustain gradual growth during fiscal year 2018. This concludes my presentation. Thank you for listening.